Good morning, everyone, and thanks so much for joining our EDC Coffee Chat, Coffee with Colleen. We appreciate you joining us, and we really are happy to have our County Assessor, Pam Rushton, joining us today. Pam, how long have you been with the county? Long time.
6 years.
6 years. Oh, I
20
thought longer than that.
26.
26, that makes more sense.
Yeah.
Um, yeah, she's going to be talking about property value rates, assessments, the whole process, what she's been seeing. And we really appreciate her coming on again this year to give us an update. And with that, just a couple housekeeping items. If you'll keep yourself on mute so we don't inadvertently pick up any background noise. And then also, if you have any questions of Pam, go ahead and raise your hand and I'll call on you, or alternatively, you can put your question in the chat and we'll read your question. So with that, Pam, I know Pam doesn't have slides today and she's got some issues with her camera, with her work computer. So she can't get her camera on, but she's here to share with us what she's seeing regarding property values across the county. So take it away, Pam, and thanks so much again.
Absolutely. Thank you guys for inviting me. It's always a pleasure to come and talk to you guys. You always have great questions. I wanted to start out by talking about a little bit about what our office actually does, because we do more than just value property. We administer many programs too. I have an appraisal staff that does the valuations, and then I have an administrative staff that administers the senior exemption programs, the current use programs, personal property. So there's several things in our office besides just property taxes. The Clallam County has about 50,000 properties that are taxable. There's several that are exempt or partial exemptions. This last year, we raised values a little bit, not as much as we have in the past. We've seen a little more leveling off of the marketplace this year. We haven't necessarily seen values come down, but we are seeing them, they're on the market a little longer and stabilizing a little bit more. A little easier to keep up with when that happens. It's hard to follow a market that's very aggressive or very declining. We haven't seen many declining markets over the years. 2008, we all saw that crash happen. Last year in Clallam County, we had about $16 billion worth of value. This year it's about 16.6, so it has gone up a little bit. We're working really hard to try to be more uniform in our commercial properties. It's tough in Clallam County because commercial properties are so diverse all over the place. And it's not like we have a lot of sales to compare to the same kind of sales. We have 3 Safeways and, unique businesses. So it's a little tougher than it is in a city where you have a lot of the comparables to watch for. So we're trying to get those in a little more uniform. We're finding that in a lot of cases, we were a little low on commercial properties. So we're working really hard on that. We do value every property in the county every year. We look at the values. We break the county into 1/6 every year. We visit 1/6 of the county, physical inspections. It's mandatory by statute that we physically inspect properties. So we inspect 1/6 of the county every year, and the whole entire county is statistically updated by sales information. So in Washington State, you are supposed to be at 100% of market for taxation. Everything in Washington is taxable unless it's specifically exempt from law. So, we have a lot of exemptions in Washington also. And if you're following the legislation this year, they're talking about more. And with exemptions, you won't find assessors being necessarily proactive with exemptions because we see the shift that happens. Washington State is a budget-driven system, unlike some other states that may have rate-driven systems. And when I say budget-driven system, I mean the taxing districts that are giving you your services, they all supply me with a budget, and I do the calculations to calculate the amount of value that's in their district into that budget, and that's how we come up with a levy rate. So the budgets themselves are restricted by law to a 1% increase on each individual taxing district that you're paying to. They're restricted to a 1% increase over last year's actual levy amount. They have other restrictions too that I don't want to bore you with because it is a kind of a complicated system, but in general, that's probably the easiest way to explain it, is that 1% is on each taxing district's budget. There's a few additives that they can add on to that too. One of them is new construction. So when there is new construction in an area, it also increases the amount of services that are needed. So they're allowed to increase their budget by 1%. And I know there's legislation this year to increase that to up to 3%, more in line with what the cost of living has done. A lot of your districts are having a very tough time budget and giving you the same services they've always given you with that 1% restriction because it's not keeping up with inflation.
So Pam, question on that is that move from that bill that would move the percentage increase from up to 1% to up to 3%. Is that only for county governments or is that for all taxing jurisdictions?
Be all jurisdictions.
Oh, really? Okay.
Yeah, the state law changed. I don't know the exact year. Everything starts blending together after so many years. But you know, they changed it. It used to be 6% years and years ago. And legislation changed it to 1%. They did it with
Wasn't that an initiative by who's that?
Tim
Who's the
Eyman.
fella? Tim Eyman, yeah.
He
That changed it to 1, limited it to 1.
He originated that, and then the legislation took it and found that was unconstitutional, but they agreed to change the law to make it a 1%.
Okay.
So that 1% has restricted many taxing districts. I know, Colleen, you work with the port, so you see the restrictions that you have when you're trying to budget for the following year. And a lot of your districts don't have other incomes, not a lot of other incomes and other fees or anything they can collect. So they really depend on their property taxes. You know, I'm not being a for or against the 3%, but I do see these districts getting into trouble. If you take a little district like a fire district, that 5 is very small. The 1% increase in their budget probably might maybe fill up a tank of gas to show up to a fire. So you see how restrictive that can be to your smaller districts that don't have a lot of funding anyway. So, you know, I know it's a real controversial issue right now because I'm getting lots of calls about it. We'll see what happens with the legislation, but that's how Washington State is restricting property taxes. So it's not, you know, your property taxes specific 1%, because a lot of people get confused with that. It's 1% over each one of the district's budgets. So they have that limitation. There's other limitations too, but there's statutory limitations that we have to follow. I do like 6 calculations for every one of those levies. So in Clallam County, we have 25 taxing districts. We have about 23 that are actually collecting levies. We have a couple of, you know, Sark doesn't collect a levy anymore, and the Quileute Valley Park District doesn't collect a levy right now. Neither one of them are collecting anything. Within that, there's about 30 actual calculations because you have some that have multiple levies, like your schools will have maybe a bond and I always still call them M&Os, but they're enrichment levies now. They changed the verbiage on that a few years ago. So those enrichment levies, those are 2 separate levies. So they have multiple levies in one district. So those calculations are all done in my office. They have to submit their budgets to me and we do those they submit them in November, and then we do those calculations for their levy processes right after the first of the year and have to certify those to the treasurer for collection, which I know everybody just got their tax bills in the mail. Our office has been very busy with that. It usually our office gets super busy when we send out valuation notices in October, and the valuation notices in October are what our office does. Those tax notices that you get in February that are due in April are the calculations based off of your taxing districts. I know people will call the county and think all that money is coming to the county. It doesn't. If you look at the top of your tax statements, it tells you just exactly how much is going to each one of those districts out of your tax dollars. So, you know, I always tell people if you're not happy with the way the money's being spent, those are the meetings you need to show up at. They all have public meetings when they're passing their budgets. So, you know, I don't control that. I just do the calculations for it. So that's a portion of what we do in our office as far as the valuation goes. I have 7 residential appraisers, and they each do about 1,000 inspections a year. They're, we're trying to implement more and more tools to do a better job. Over the last few years, we've bought some software that has helped us do inspections. It's a different atmosphere out there. I was an appraiser when I first came to the county, and it's a different atmosphere in the county now as far as going door to door, knocking on their doors. As you probably well know, most people don't want to see us coming because they automatically think that's going to increase their taxes. My job in my office is to be more uniform and make sure that the tax burden is uniformly and equitably distributed amongst the taxpayers. So we don't benefit anything by raising values or lowering values. It doesn't, because it is a budget-driven system, it's just a reallocation of where the tax dollars are coming from. So if you saw some people this year, because of a lot of the districts that are passing levy increases, and that's how they go beyond that 1%, is they have to go to the people and ask. And yeah, I don't know, most people are from all over in the county, but we've had a lot of school districts asking. We've had some fire districts. Those are usually your most common ones to lift their levies. I think you're going to see it more. The hospital just did it. You're going to see that more because of that 1% restriction. They're coming out to the people and saying, to keep your services up, we're going to need more money. And that's the people that make that decision. So I know I talked to a gentleman last night who had called about his taxes went up, but his value went down. And that happens too. So your value doesn't always equal what's going to happen to your taxes in the future. Most of that is going to be on based on what's being voted in. So, we've had, the hospital was a big impact because that was most of the county. We have 2 hospital districts in Clallam County. We have a Forks Hospital, which is District 1, and then the hospital that's here in Port Angeles is District 2. They both have lifted their levy lids the last couple of years. And those have impacted the tax dollars that you're seeing on your tax statements right now. Fire District 2 went out for a levy lid last year. All of them have gone out over the years. I think there's some talk of Fire District 3 this year going out for a levy lid lift. Fire District 2 is the outskirts of Port Angeles. Fire District 3 is the east side, and it goes into Jefferson County also. So we share a district with Fire District 3. So the tax dollars are normally, if they increase, like I said, this gentleman last night, he had lowered his value by, I don't know, it's 15,000. It wasn't a lot, but most people think when they get their value, that means they're going to either get a raise in their taxes or a lowering in their taxes. It doesn't necessarily work that way. There's a few things that shift taxes. Exemptions is one of the things that I talked about. Because Washington State is a budget-driven system, that means that budget still needs to be collected, no matter whether there's one person or a million people paying it. So when there's somebody that is getting an exemption for something, that takes one of those people out of that million that might be paying it. And so the amount that they used to pay now gets shifted to the remaining taxpayers. So you see some of that happening too. There's so many exemptions out there, I couldn't even name them all. The ones we administer in our office, I know really well, but the Department of Revenue also has exemptions for different kinds of low income, economic development. There's a lot of different ones that they do have exemptions for that they apply directly with the Department of Revenue with.
Yeah, how does that work, Pam? Is it that how does that work if they are exempting them at their end?
They send me a letter and tell me if it's a partial exemption, because some nonprofits may have say a nonprofit building or a low income housing building that has a laundry room that might be profitable. That laundry room might not get the exemption, but the remaining low income housing does. So they send me a document, and there's actually an online too at the Department of Revenue. You can see the exemptions that they have issued in Clallam County or any county in the state. When people apply for those, and if they're approved and they send me the letter, it will also be online. So they'll tell me how to exempt it. They'll tell me whether it's a partial exemption, whether it's a total exemption, what the exemption is for, and I keep that document with that file. And those they have to reapply for. It doesn't automatically come through, and they also have to stay in that particular type of property for at least 10 years, or they'll have to pay that back. So, you know, I've had a few of those, but not very many do they remove them. They stay exempt because they're usually a nonprofit of some sort that's continue working.
And what percentage of our properties by numbers of properties, but then alternatively value of properties are exempt?
Well,
We hear a lot about that.
yeah, there's about 7,000 to 8,000 properties that are exempt totally. We
Okay,
don't
out
even
of 50.
out of 57. We have 57 properties,
Okay,
and 50 were taxable.
okay, got it.
That's an approximation that changes all the time. So, you know, we have,
Mhm.
if you have developments and there's new properties created out of a division of land, that adds parcels to the property. Some people, there's options out there to do lot combinations, and they'll eliminate the developability of two lots into one. So we combine those, so then you lose a parcel. So it's always changing.
Yeah.
And that was total exemptions. Now we have a lot of other partial exemptions. I couldn't tell you off the top of my head how many those are. I know we have the open space exemptions, which give a partial exemption to property taxes.
Mhm.
And we have an open space agricultural, we have an open space, and I know the planning department commission right now is looking at rewriting that code on open space. It hasn't been looked at in many, many years. So I know they're in the process of doing that. I think they're gonna have a public meeting here soon on how to change that. Because in Clallam County, on the open space, it's a point system. It's a public benefit point system. So if you're going to make up somebody else's portion of their taxes, they're willing to give you a discount if you continue to keep your properties in a public benefit. So right now, the public benefit system has been pretty lenient as far as what they would give points for. I mean, I think there's one in there for scenic vista. I mean, there isn't any place in Clallam County you don't have a scenic vista. So, you know, they need to relook at some of the way we've thought about things in the past. We're changing pretty fast. So I know they've proposed a new point system for the public benefit. So and I've kind of stressed this in the past too. If the public is going to make up your tax dollars, they really do need to have a benefit from it. So, you know, it's either keeping open spaces, not filling in ponds that are actual wetlands. They're not supposed to do those anyway, but you do see that kind of stuff happening. So, you know, it's to give them a break on their tax end. When I say they're a break, that means the remaining taxpayers make up that break. It's because of the way the system works. A budget-driven system, the taxes don't go away, they just get redistributed. So that's one thing that's happening here real soon. I think they're getting ready to have a meeting to take it to a public meeting for opinions on the public on the new point system. And when that happens, that means I need to re-audit all open spaces properties at that time to see that they qualify for the new points. Because normally when you remove somebody from non-compliance from one of these, there's what they call compensating tax. I don't know if I have any realtors in the room, but a lot of times those guys or the title companies will contact us to see what that compensating tax is going to be.
And is that you go back 7 years and
On open space, you go back 7 years on what they would have paid,
yeah,
plus penalties and interest.
okay,
The only way they can remove the penalties and interest is if they contact us within a 2-year period that they're going to stop doing it. Say, you know, an elderly couple just can't farm anymore. So they'll come in and say, you know, we're gonna have to stop farming. We need to get this removed. And then we start that process.
got it.
If we go out and audit and find that they're non-compliant, the penalties and interest automatically apply. It's
Okay.
state law, you know, they have it in law on how that is to be removed. It's 20% penalties and interest that happen
Wow.
to what would have been paid if you had not been in the program. DFL is 10 years at current value.
What's DFL?
Excuse me, designated forest land.
Okay.
No, yeah, you got to catch me on that. We talk in acronyms all the time and think everybody knows what I'm talking about. That's not true. But designated forest land, we used to have 2 timber programs. We used to have a timber open space program too. That was a little bit different. It was more like the open space agricultural. And it made no sense to me to make somebody change a program because of their acreage had changed. It's the same timber. Why are we managing under two different programs? So a few years ago, the commissioners chose to combine those two programs and only have this designated forest instead of timberlands, open space. Because like I said, if you had 20 acres years ago and you went below that 20 acres, you could no longer be in DFL. Trees didn't change, land didn't change, but the program changed. So legislation gave you the ability to look at one. So they changed the acreage in DFL to 5 acres, which that was coincides with what timber is. So it's a minimum of 5 acres to be in managed commercial timber. And that these programs, like I said, timber specifically, because it takes so long to grow and your harvest is so many years out, they pay a tax, like a REIT tax when they are, when they sell the timber. So they kind of reimburse the system at that point. But if they're removed, it is 10 years at current value. So if I ever have somebody that's looking to possibly develop property, they're much better off to remove it before they develop it, because as they develop it, it makes that property more valuable. So if you take a 40-acre parcel and I'm valuing it at a 40-acre parcel, that value total is going to be less than if I'm valuing that at 41-acre parcels for sale, because they're much more valuable.
Yeah.
So I always say, depending what you're going to do with it, you might want to remove it now before we put new values on it. Because once we put those new values on it, it's at current value 10 years back, even though that wasn't what it was then. So it's confusing to people, but my staff is really great at explaining. I always say, if you have a buyer, send them in, talk to us so they know what they're buying on for when they continue these properties. So that's the program we manage in our office. We do personal property. There's legislation this year too to change those limitations on personal property. Personal property is most personal property that individual owns is exempt by law. Your dishwasher, your stove, those are real personal properties in a household, but those are exempt by law. If it's in a business, it's not. So if you have a restaurant, we are going to be looking at your overhead fans and your cash registers and your chairs and tables. That is your inventory and your personal property. If you're running a construction company, your excavators, your tractors, whatever you're using. So personal property really is more of a business. Personal property is what that is. That is not exempt. We have to value those. And then they pay the same tax rate as a real property does. The tax rate is across the county is always uniform.
So Pam, of those 7,000 properties that are exempt, can you characterize them a bit more? Is it primarily designated forest land or, a lot open space, senior exemption? What's the bulk of that? Or just characterize those.
None of that 7,000 is in an exemption that would pay up tax. Those are all completely exempt. That would be like the county courthouse, the city hall, the hospital. Okay. Your taxing district, the port district, your buildings are exempt because it is a taxing district that is actually owns that. So and I know sometimes it's controversial because I get a lot of calls. Anytime the tribes put something into trust, it no longer is individually owned. The federal government is holding this in trust for the tribe. Those come off the tax rolls. So those are totally exempt. Those 7,000 is that kind of stuff. The other ones, last year we had about 3,000 senior exemptions, which right now we're having a tough time. And if anybody's on a senior exemption and you got your tax statement and it's full taxes, it's because you need to renew your exemption. As every district, you're looking at budgets being very restricted. We had a big budget cut in Clallam County last year, and I lost my senior exemption specialist. So it really backlogged us in processing those forms. So some people that have maybe audited last summer still haven't been processed yet because we're still waiting for more information. So they got their full taxes right now. Once they qualify, there's 3 levels to that program. So once they qualify, depending on which level they qualify at, that exemption will be applied. So I tell everybody, pay your first half so you're not late. And then if you qualify for that exemption, when we get it processed, they'll apply it to the second half. So that's just some information out there because there's a lot of foot traffic in my office right now over that. It's just having to pass that huge workload onto other people in our office that has big workloads on their desks already. It's been a little tough, and we're scrambling here to try to get the work done. But that's exemption for the senior. They're looking at that in legislation this year. They're looking at redoing the income. Right now, it's the median income they use of each county to come up with those income levels that they have. They're looking at doing that more often. The economy is hard to keep up with. When they first started doing the median income, it was a 5-year span. They would look at those incomes every 5 years. I think it was last year they changed it to 3 years, and this year they're looking at it again. So it's a following it is tough sometimes, because when they do that too, they'll change what's acceptable for deductions or what income we have to look at. So we have to apply that year's law to every one of those. So it's constantly changing. That's another exemption that we process in this office. And
do you use HUD rates for median income? And is it based on the number of people in the home?
well, it doesn't matter how many people are in the home. They count household income. So if
Okay.
you and your spouse both have retirements and Social Security, we have to count that. And they call it disposable income at the state level for that program. So it's very confusing to people, because they'll give me their adjusted gross and they may not have to pay taxes on their Social Security, but we have to count that in income because it's disposable income. So the calculations are a little different than your federal calculations.
Okay. So who sets those median income rates?
You know, I think it is HUD, but we get those from the state every year.
From
break-
OFM?
Pardon? It
From
might be,
OFM?
think of where that actually comes from, because I only see it at once every 2 or 3 years. And
Okay.
the Department of Revenue will actually do those calculations, because it's a percentage of the average income in the county for the different levels. And they're working on changing those again too. So it's been pretty hard to keep up with some of these changes, because if they change it every year, and we have to audit somebody and go back 3 to 5 years on the audit, we have to see when their income changed. We have to apply different years to each one of those year audits, because there's different criteria and different deductions that happen every year.
So for the senior exemption, aren't there 2 levels, if I
There's
remember correctly?
There's
That,
3 levels.
go ahead,
There's 3 levels in it.
3.
The
Okay.
first level is at 44,000 is the maximum this year for Clallam County. Excuse me, 44, 46. I haven't been working the program because it changes so often. I feel like I haven't kept up as well as my girls out front have. The first level, they exempt excess levies, which are your school bonds or your enrichment levies. Those are excess levies. So seniors that qualify for the senior program, those levies are exempt from them. That means that the income that those levies were collecting, that gets shifted to the remaining taxpayers. So at that senior level, there is no deduction from value, just they are excess levies, and their value freezes at the time they qualify. As long as they continue to qualify, that frozen value is our starting value. It can go down for tax purposes, but it cannot go up. That's one of the limitations that the state has put on this. So keep seniors in their homes. The second level, it deducts 35% if you qualify for that from your taxable value. Same thing, it freezes it. You get the exemption from excess levies, but you also get 35% of your value removed for tax purposes. At the bottom level, which is the level 1, and those all have income verifications with them. Level 1 is exempt. You can do up to 70% of your values removed, plus you are still on the other brackets too, where you're not paying to the excess levies and your value freezes. So it is a really good deal for seniors that need some help in qualifying. But again, the state looks at all income coming into the house, even if it's not federally taxable. So we need to, I know people get very upset with us for the information we ask, but I have to make sure that their income is that they're claiming all their income. It's a little difficult sometimes because not everybody files a tax returns, and it's a self-reporting system. So a lot of times we'll ask for bank statements to show how much money's coming into their household. And if they're getting gifts from kids, say the kids are supplementing their income $300 a month, we have to count those kind of things. They call it, like I said, disposable income. They're changing what we can deduct every year. For years, we couldn't deduct Medicare supplements. Now we have a list of providers that we can use, that we can deduct those Medicare supplements. So every year the law changes with this, but that's another program that is administered in my office. And it's a little tough right now because I don't have anybody directly to send somebody to. It's all of us are doing it. That was the position that got eliminated in my office in the budget cuts. So you probably read in the paper about different budget cuts at the county. And you know that, like I said, that 1% is very limiting. We don't have a lot of other revenue streams to pay for some of our services. My office is budgeted out of the general. I don't have any revenue streams that come into my office. We make no money in here. I don't even have a cash drawer anymore. We used to have a petty cash drawer for copies and things like that. Times have changed. Most people want things electronically, so we're not even keeping a cash drawer for that. So any cash that our office would collect for like a application for an open space, we have them directly deposited with the treasurer's office. So we also deal with all sales that go through the county. We track all the sales. That's how we do the annualization of the values, is we're tracking all those sales and analyzing those sales. We'll do sales verifications with, you know, something that doesn't look right. I think Colleen years ago brought to my attention that we had valued some properties up on Bell Hill that looked like they had basements, but didn't. Do you remember that, Colleen?
Mm-hmm,
Yeah.
mm-hmm.
And we had to go back through there again because some of those foundations were so high and had doors and all kinds of things on it. It looked like it was a basement, and we had incorrectly valued those. So we went back through that area and took a better look at it, went around every house, because some of them were basements, but some of them were just really high foundations for the elevation for the views. So, you know, we're looking at all that stuff every year. That's kind of a sales verification. If I had gone to a house that sold for $100,000 less than what we had on it, I would question why we're so high. Was the sales an arm's length transaction? Was the house having problems that we're unaware of? Same thing if it sold for $150,000 more than what we had on it. Did they finish a basement that we weren't aware of? Did they add on to the house? Did they do a total remodel? You know, what we need to see why those are so out of whack. Because normally we're within about an 80 to 90% accuracy on our assessed value versus the market values or the sales values. So we're looking at that stuff all the time. That's another thing that we do year round. We're analyzing sales that come through here. I have a statistician too that has some wonderful numbers. I could have him come and give you a presentation, but he talks over my head. So it's like, I kind of understand what he's looking at, but he'll break them down to neighborhoods, to types of properties, to square footages, to quality of construction. You know, we're looking at all of those things when we're looking at annualing a property. We're trying to put them in the same buckets, apples to apples, oranges to oranges, not apples and oranges mixed together. You know, when we look at thousands of sales, yes, there's going to be some that may be looked at incorrectly, but those sales verification help us a lot. So when we see a sale come in that doesn't look right to us, we'll spend a lot more time with that one because something's usually wrong. Basements is one of them that we see a lot. They build a basement, but they don't finish it until later, or until they just sell it.
Yeah. So Dawn has a question from you. Dawn, go ahead.
Okay. Hello, Pam. Don here with Port Angeles Hardwoods.
Hi.
And for those of the people that don't know, we're a hardwood mill. They're in Port Angeles that employs around 90 individuals and higher than average compensation for the county. And Pam, as you know, we've been unhappy with the appraisals that you do. I guess more of the methodology. Because unlike a lot of properties in Clallam County, our property is assessed at essentially the income produced by the company. So one of the problems that we see with it is it's not even based on our profitability, but on the profitability of Fortune 500 companies with sales in, you know, billions of dollars. And they don't have any facilities in Clallam County. And, not only are they hundreds of times larger than our mill, but they're not even the same business as us. So Pam, could you please tell us why, for property tax valuation, you assess our hardwood bill based on the profitability of companies like Weyerhaeuser with, 7.7 billion in sales? They own no hardwood sawmills and they're a REIT, so they get the majority of their income from real estate. We don't understand why.
I know, Don, we've had many conversations. The hardwood mill is unique, the Interfor is unique, McKinley is unique. Those are really large industrial properties that I personally don't have the qualifications in my office to make those valuations. We're working on educating our commercial staff. So in those cases, I ask for the Department of Revenue to do an advisory valuation on those kinds of properties because we don't have the expertise here, and it wouldn't make sense to the taxpayers for me to hire a full-time industrial appraiser that has an MAI or whatever, somebody that is on staff to do those. So the Department of Revenue by statute on anything over 25 million have to do the advisory for me. And in Don's case, we have been using the state advisory for many years. So their methodology is a little different. They do put more onto an income. And because they're trying to generalize these types of property, I know Don is not happy with the value they have put on it in the last few years. And we are going into what we call the Board of Tax Appeals, which is one step above the Board of Equalization in those cases. Those are very complex properties to value. So those questions that Don's asked, we've had these conversations with the Department of Revenue. They are the ones that he actually sends the information to for valuations. Our office uses the advisories because we don't have the expertise in our office. So I don't know if that answers your question, Don, but those questions are more directed at the Department of Revenue.
Actually, it doesn't, because, Pam, this is your assessment. It's not the Department of Revenue's. This is actually yours. And I just a question out there, doesn't your decision to tax us this way hurt Clallam County? Because, most of the counties in the state of Washington don't use your valuation. So, you take a small mill like us and, you're comparing us with a Weyerhaeuser, 7.7 billion in sales compared to our little sales. And they're a REIT. They're real estate transactions. We don't own any timber land. So I don't understand.
So Don, can you talk to Department of Revenue and ask him these questions and try to get them to change their evaluation?
Well, it's not their, it's Pam's. It's Pam's choice and it's Pam's decision to do this. And so, and they will tell us, they say, well, this is what the county assessor is asking. And so, they're doing it at Pam's request.
Because they have the expertise in their office. That's the reason I asked them to do these advisories. Those 3 mills, I ask them to do them every year. Like I said, they're very complex with the numbers, with the personal property, with the comparables. This is a one-on-one with Don that I know he's not happy with. We've been dealing with it for years. Actually, I believe he has attorneys that are filing with the BTA that are dealing with them. I haven't heard from your attorneys lately, but it's a unique situation. Like I said, do not have the expertise in my office specifically to value those. So if I was to not use the advisory, what would I base that on? Because I don't have that expertise. That's why I have asked for the Department of Revenue to make those determinations of value. Yes, I do sign off on them, and yes, they are my appraisals when I sign off on them. But I couldn't do justice to the remaining taxpayers if I was to throw a dart at your value and just come up with something without the expertise to do the numbers. So that's why I asked the department to do those for us. So yes, I'm responsible for them, but I, like I said, I don't have the expertise in here to do them. So we send them off to have somebody else do them.
So Pam, with that, I mean, you know, you have, I don't know, what is it, like 38, 39 counties in the state of Washington? And just a few of them use your methodology.
You know,
And
it's a
I mean, so if I was a business coming in, like, we're gonna do a mill, put a mill in there now, we would specifically not go in Clallam County because of what we consider an income tax. Doesn't that hurt the businesses in the county?
How would it hurt the businesses in the county? Don, I'm confused.
Well, let's move on. I know this is a one-on-one conversation, but I think we've got other topics that folks probably want to hear about, and I've got some questions in the chat here, so I'll move on and read those. Paul asks, what factors go into on-site and non-on-site home valuations, including the geographic area that is used for comparative purposes?
What is he asking again? I'm a little confused. What information?
What factors go into on-site and non-on-site home evaluations? I think once every 6 years, you actually go to the property and value them and assess them. But then, so I think he's asking about that. Like I think it's that you do just a paper review based on the data that you have for 5/6 of the county, and then 1/6 of the county, you actually go and visit that area. Is that
Yeah.
right?
Yes, when we're in the physical evaluation area, we're looking to see for changes, depreciation, recalibrate our actual data that we have, if things have changed. A lot of times nothing changes. You know, they've maintained their house, averagely maintained their house. They haven't added anything on, they haven't, you know, anything that's gonna depreciate their value or appreciate their value. They stay pretty much the same. But in our physical inspections, we also find lots of changes that happen, you know. They've updated their roofs, they've updated their heating system. Some things in different jurisdictions require building permits, some things in other jurisdictions don't. So we don't always get notified of those things. For example, the city of Port Angeles has building permits for new roofs. Clallam County doesn't. So we find those things when we're in our physical inspection area. And to be honest with you, we find lots of new construction when we're out there too. You know, not everybody follows the rules and gets their building permits like they're supposed to. Each one of your jurisdictions will send their building permits to us to notify us that there's new construction to be looked at for the following year. That doesn't always happen. So when we're in our physical evaluation area, sometimes we pick up new construction. We're looking for any changes. It's really an update on the data more so than we don't do the actual appraisal in the field. The data is then compared to other comparable data for sales information. So when I said the entire county gets reevaluated every year, they're put into that mix even in those physical inspection areas. Those physical inspection areas are just to look for changes, depreciation factors, things that happen. A lot of people don't know that if you have something happen to a building, say a tree falls through your garage, you need to do a destroyed property with our office because we don't always know that those things happen. You know, it hasn't happened lately, but you know, those big windstorms we've had, a lot of people lost their carports, they lost their garages, they lost their roofs. You know, things happen and it affects their value in those things. So we need to know to remove some of those buildings, maybe from the tax rolls, as far as the valuation process. So a destroyed property, it's online and there are applications here to let us know when that changes. A couple of the caveats with destroyed property is if you self-remove or it's a personal reason you do it, like say you have a mobile home that you're just taking off your property or a garage that is, you know, you've destroyed it and you've taken it down. If it's a voluntary removal, the way the state law reads, if it's there as of January 1st of the assessment year, that value is, you're paying taxes on the following tax year. So I always tell people, if you're going to remove something from your property, if you're going to tear down an old cabin or tear down an old garage, do it before January 1st of the assessment year. Otherwise, you will pay taxes on it the following year. It's gone over a year by that time. So I always tell them, get it out of there before January 1st and get a hold of our office so we can do the inspection before that. If it is a act of nature, a tree fell through it from a windstorm, they do allow us to prorate that as of the day of the damage. So that's something that people are not always aware of. I talked to a gentleman the other day that tore down a garage 2 years ago. Well, I need evidence of when that garage was torn down so I can apply that appropriately. That's why I would say get rid of it before January 1st if you're going to tear it down. So destroyed properties is one of the things that a lot of people are not aware of. And that is one of the things we're looking for too when we're doing the physical inspection. When we're doing the annualization of the entire county, when we're actually making adjustments to the market, we're looking at all the sales. We're trying to, like I said, we analyze it in many different ways by, by sizes, because we did find, it's really hard a lot of times in these little houses to find that value and a way to value those because they're selling for so much more than, per square foot of a 2,000 square foot house would go for. It's just, we have to find that fine tune to try to make sure that we're valuing as appropriately as we can with the information we have. So there are 3 approaches to value. You have the market approach, the cost approach, and the income approach. And I believe Don just talked about the income approach. So the income approach is inappropriate from a lot of properties, residential properties. We don't use an income approach on because you're not making an income on them. Apartment buildings, you're looking at your rent factors. So anyway, they're different ways of valuing those, and we're looking at all that stuff when we're doing the annualization. Does that kind of answer that question?
Yes,
Okay.
yeah, it does. There's another one from Will Johnson, and he's asking about residential surplus acreage. He says, why would a 13-acre residential zone property enjoy an exemption? Their taxable value was only $2,836. What is a residential surplus acreage exemption?
Well, there isn't one. So I don't know what that would be. There isn't an exemption for that. We do identify properties differently because if you have a 5-acre parcel and you have 4 of that acreage in, just excess land, that's more of what I would call that excess land, and put them into these categories. On a 5-acre residential property would be unlike a 5-acre commercial property where they would use the entire 5 acres maybe to put a building. I mean, that's huge, but maybe Amazon or Tesla might use that much, but they're not going to use the full 5 acres. So the most valuable property on that 5 acres is the home site. So we'll put a minimum of an acre for the home site, and the others would be either called excess acreage or residual acreage. So they're not getting an exemption from that. It's just that when you look at the marketplace, we compare that to other 5-acre parcels. And like I said, the most valuable part of that 5 acres is the building site. So a building site on the waterfront is going to be much more valuable than a building site, south of the highway where they have a lot of trees around them. So we look at that building site, and then that other is residual acreage. It's just a lesser per acre rate based on what the market's doing. It's not an exemption from that. The only way they would have an exemption from that would be as if they were in one of those programs I talked about. There's very few cases where you'll see that we'll put a no value on something. It has value, whether it's usable or not, even if it's just for privacy or a buffer, or people pay for that in the marketplace. That's why they're on 5 acres and not on the city lot. So it's excess acreage. It's not as valuable as this home site, but it is still have value to it. I'm thinking that's what he's looking at, but without looking at an individual case, I couldn't explain that specific scenario. And they may also be getting an open space exemption. I don't know.
I think that, yeah, makes sense. Johanna asks, you mentioned personal property taxes for businesses. A restaurant, for example, buys equipment and pays sales tax on it, then continue to be taxed on their equipment year after year. Did she hear that right?
Yep, she did.
It's a pretty low rate though, isn't it?
It's the same rate as you are.
Oh,
We're uniformity in the state of Washington. The tax rate is the same across the entire district. She is absolutely right. They do pay sales tax, and then they pay property tax every year.
got it.
To be honest with you, I'm not a big lover of personal property tax. It's very hard to monitor because it is a self-reporting system. So you'll find that if we're not aware of a new business, we may not have that, but his same kind of business might have been reporting. It's a self-reporting business. We're always out there for discovery. It's a tough one to keep up with. I don't know if they have a business that they're looking at. There is legislation this year, and it looks like it probably is going to pass. I believe it's going to exempt the first $50,000 of personal property for personal property taxation purposes. There will be documentation that they'll have to sign. That again gets looked at a lot. Like I said, this has nothing to do with the assessor's office. It's my job to assess those personal properties, but you're right, they do pay taxes on it every year, but so does somebody with a residential house. They're paying property tax on it every year for those same services. That's what those monies go to. They don't go to a different pool of levies. They go to the same levies that are in that district.
Got it. Do you know the House or Senate bill for that one that you're referring to?
Yeah, I'll be honest with you, Colleen, you follow legislation all the time, but when I first took office, every property tax bill that was dropped, I was trying to figure out how to implement. So now I just wait till they pass them.
Yep. Yep, I get it.
Legislative.
I get it.
Yeah,
There's so many this year too,
There
especially on housing, and yeah,
Yep.
it's hard to keep track of.
it is very hard to keep track of it, and
Mhm.
unless somebody does that full time, I was finding myself making myself crazy trying to track all those bills. We do have in the Assessors Association a legislative committee. They track them and disperse information to the remaining assessors.
Got it.
I don't have the bill number. I think if you looked it up under the personal property, it'd probably pop up. Because that is a big bill this year. There's some other ones, the seniors are always a big bill. There's, tax increment financing. That's something new that's going to be in our community. I believe we've been notified that they're looking at doing one in the city of Sequim. I think it was even in the paper not too long ago. To be honest with you, I've never implemented one of those, so that's a learning curve for me. I've been in this office since 2005, so 20 years. It's a fairly new tool to help economic development. I'm going to be working with the Department of Revenue if this goes through on how to monitor that. So
Mhm.
there's always bills out there every year. There's homestead bill out there this year. I don't know where that's going. And that would be for people that are actually living in their homes. Again, in Washington, we have a lot of self-reporting systems. It's very hard to monitor those because you never know that you're getting everybody, because it's up to the taxpayer to report it to us. If we find things in discovery, we will add them to the tax rolls or communicate with the taxpayers. That's normally what happens with personal property.
Okay. John Temple asks, and I probably know the answer to this. We moved into Clallam County in 2019, and our house taxes have almost exactly doubled in the 5 years. In conclusion, can you generalize why and give your thoughts as to whether they will double again? Basically, is that what we should expect? I
Yeah.
bet there were levies that were passed, school levies, hospital levies, that kind of thing that covered his property.
It's a multitude of things. It could be the value. I don't know if they've done anything to the house or the house is just accelerated in value. Because as you know, if they came in 19, we went through a heck of a market between 19 and 25. So there were property values increasing pretty rapidly in a lot of places. Like I said, it's leveled off a little bit. But again, the levies are going to have more to do with that than anything. I would have to look at his individual. I wished I had a crystal ball to see what was going to happen in the future, but I don't. I think levy rates, like I said, because your districts are having problems supplying the same services, I think you're going to see more of these people, these districts coming out and asking for levy lifts because they're having a hard time surviving. So I don't know, unless the state of Washington comes up with another way to pay for your services. But in Washington state, we have two legs. We have, your sales tax that they highly depend on for income to supply services, and we have property tax. And the property tax itself, you can see exactly where your dollars are going to. So the districts that you live in, we call them, when we consolidate them together, we call them tax code areas. Everybody in that tax code area is paying the same rate. I'll give you an example of how the levy affected some people this year. I live in what we call tax code area 102. And I'm only using that for an example because that does have both the hospital and fire district 2 in it, which both passed maximum levies this year. Last year, the levy rate for tax code area 102 was $8.70, and I'm rounding there because we go out 12 digits, but $8.70 was the levy rate per $1,000 worth of value of your property that you pay property taxes on. So this year, 102's levy rate is $9.64. So you see what a large increase in that levy rate can happen. And I'm not picking on any districts because I know they're all having trouble surviving, but just the hospital district 2 alone, and because that's a bigger district than a fire district, last year hospital district 2's levy was about 32 cents. This year it's 75 cents because they took that vote out to the people and the people agreed to raise that levy rate. So that's a pretty huge impact on a $500,000 home. When you look at that per $1,000 worth of value. So those levy rates are what I can never predict what they're going to be because we do the valuation here. I just do the calculation for that. A lot of what's going to happen to your property taxes are what you're going to be voting on. That's
All right.
kind
Great. Thanks. I think it did. Yeah. So we've got a couple more questions and we got 3 minutes. So are there any deductions for properties that have lost acreage from erosion?
If it affects your value, it could. It doesn't always affect your value. If you had a 30-acre parcel and you lost an acre from erosion, that has very little impact on your overall value. If you have an acre and you lost a half an acre, it could. So, depending on the circumstances, erosion we do see that on certain areas of the waterfront or rivers. And normally people will notify us. They've either had a survey done or you can show what's happened there. So we'll relook at those things, but absolutely it could, depending on the circumstances, it may not. So.
Got it. So last question, and Carol put some great links into the chat. Thank you, Carol. How many and what kind of parcels are evaluated for property tax purposes by the Department of Revenue? And does the county pay for those evaluations?
No, we do not pay the Department of Revenue. Those are in statute that they do them for us over a certain value. The only 3 that I do have the Department of Revenue do are those 3 that I mentioned earlier, those industrial properties that are very complex. So I asked for them to do those, what they call advisories. Those are the only ones. I work very closely with the Department of Revenue if I ever have any questions on how to administer a program or new laws that they've implemented or changes that are coming down. Or if I get information from say a commercial entity and I want some clarity on how to interpret it, I'll use the Department of Revenue all the time. The county assessor's office is just a leg of the state. I mean, the whole county really is a leg of the state. They oversee us. The laws are state laws. I'm just implementing different programs or laws because of what's on statute. So those are the only 3 that I actually use the state to value at this time. If we had another complex one, I could ask them to do that too, but I haven't at this point.
Okay. All right. Well, it is 9 a.m. and so we're going to call it a morning. And Pam, thanks so much for joining us and explaining a really complicated process that I know you didn't create. Our state legislators created. It's probably good for the taxing districts that it's budget driven, but it makes it really confusing to the property taxpayers to understand, how does this work? Why, how'd you come up with this? It is a system, obviously, that is fairly uniform, but it is complicated to the citizens. So really appreciate you coming on and explaining all the complexities of it. Thank you.
I just wanted to give everybody a heads up. The Department of Revenue has some great pamphlets out there, some literature for different things. It explains the 1%. It explains homeowners property tax, mass appraisal. There's several things that are on the Department of Revenue, and there's links on my website. WACO, which is Washington Association of County Officials, is also coming out with a video, a simplified video to explain property taxes that I will link to my website when they get that done too. So I try to put tools out there to help people understand, and my door is always open too. So I'm very willing to look more on people's information. But
all right. Thank you, Pam. And we'll put those links in our next newsletter. Thanks very much.
Thanks,
okay.
Colleen.
Have a great day, everyone. Bye-bye.
Bye-bye.